Hello and welcome to Looking at the Markets with David Modell. You guys give me, and gals, give me such great comments in the comments section of my videos. I appreciate that. Please keep the comments and questions coming. Here's a great question from Correo Amato. Thank you for the question, by the way. He says, good video, David. Thank you for that. Have you ever done videos about using indicators to complement each other? I believe he's referring to combinations of technical indicators, indicators that work well in a team. Again, great question. Thank you for that, and I will try to answer that in this video. I was thinking about using this topic anyway, though, regarding combining indicators, how to combine them, which ones to combine. So let's take a look at that. I mean, a lot of you guys and gals out there are combining indicators, maybe two of them, maybe three of them. For example, you might have a moving average, you might have RSI up there, you might add the volume, which I'm going to do right now. By the way, I'm looking at TradingView right now, and there's the volume. So you might even have two or three indicators at once. That's okay. Anything more than three usually gets a bit cluttered, might be a little bit confusing for a lot of people. But let's say you want to use two or three indicators. What's a good combo? What's a good combination? And what's my thought process behind combining them? So let's get into that. I've written this document here. So here we go. Which combination of technical indicators to use? Here's my thought process. It might not be as useful to combine indicators which are essentially expressing the same thing. Like, for example, you notice I've got indicators that don't really express the same thing. I've got the I've got the RSI, which is an overbought, oversold indicator. I've got a moving average, which is a momentum or trend indicator, and I've got the volume bars, which indicate the volume, of course. Okay, so they're all expressing three different types of information. I'll explain it. Okay, so yeah, it might not be as useful to combine indicators which are essentially expressing the same thing. For example, the stochastic indicator and the RSI basically serve the same function because they're both oscillating indicators, meaning they go up and down within a range. All right, so here's the RSI. You can see it's within a range, okay, and it goes up and down within that range. Unlike a moving average, which theoretically could just keep going up and up forever if the price kept going up, or it could keep going down and down forever. All right, it's not range bound, it's not just going up and down within a range. So whereas RSI, stochastics, so on and so forth, CCI, they're oscillators. All right. So RSI and let's say the stochastic indicator, they both basically serve the same function. They're both oscillators. They go up and down within a range, and they indicate overbought or expensive and oversold or cheap conditions in the price. So that's why I wouldn't necessarily put stochastics and RSI or CCI, I wouldn't put more than even one of those on the same chart, probably, because they serve the same function. All right, so therefore, I would usually prefer to combine indicators from different categories so that they're not redundant or serving the same purpose and therefore unnecessary. All right, so I might pick one from one category, one from another. If you like to use two indicators, then you can select two out of the three listed below. If you like to use three indicators, then you can select one from each category. So you can select one from all three categories, in other words. All right. So here are the three types, the three categories. Again, if you want two indicators, you might pick one from category 1, one from category 2, or whatever. Just pick if you want two, then pick from two of these categories. If you want three indicators, then pick one from all three of these categories. One from each. All right, it's like a menu when you go to the restaurant. All right. So Category 1 we just talked about, which are oscillators, or you might call them overbought, oversold indicators. That includes, as we just talked about, RSI, stochastic indicator, CCI. That would also include MACD, Bollinger Bands, Keltner channels, and so on. All right. So basically, if it bounces up and down between two boundaries, then it would probably fit into that category, including Bollinger Bands, by the way, which that is overbought, oversold, and also bounces between two lines, two boundaries. Okay, Keltner channels and so on. All right, so you might pick one from that. So you have an overbought, oversold indicator, and that can help to give you an entry and exit point. All right, category 2 would be trend or momentum indicators. That would include moving averages, and we just talked about that. There's a moving average here. Like, for example, this one. This is just I just put a simple moving average up there, and when it's trending upwards, that's probably a good thing, because I do want to buy something that's trending upwards generally. Okay, maybe not at the moment, maybe not in the short term, but in the long term, if it's trending upwards, that's usually what I want to buy. I don't want to catch a falling knife. I don't want to buy something that's overall generally trending downwards. All right. So that's just one example. So yeah, this category would include moving averages, the Kopek curve, parabolic SAR, Ichimoku cloud, etc. But also the RSI, stochastics, CCI, MACD, etc. can also serve this purpose of a trend or momentum indicator by watching the direction of the lines to determine the trend. All right, so to clarify that point, we'll look at RSI again. Some people might actually use the RSI line as a momentum indicator. So, for example, if the RSI line is trending upwards, that could serve the same purpose as a moving average in terms of at least telling you the overall direction, of the price action. So really, you could just use one indicator if you wanted to. You could use the RSI both as an overbought, oversold indicator, with for example, the 30 level being oversold and the 70 level being overbought for the default settings on the RSI. And you could also use it as the trend or momentum indicator if you just watch the direction of the line. All right, so RSI and all those other ones here that I mentioned, let's say the RSI, stochastics, CCI, MACD, and so on, those could also be in the trend or momentum indicator category, in addition to being in the overbought, oversold category. All right, so they could serve dual purposes. And then the third category is volume indicators. That would obviously include volume bars, which are usually found at the bottom of the chart. All right, so there you go, volume bars, right? Other volume indicators would be VWAP, OBV, which is on balance volume, money flow, and so on. All right, so so again, it's like a menu. You could pick two, you could pick all three. But you might not want to, if you're using the RSI, I don't really see a lot of purpose, to put the stochastic up there as well. You can, that could serve a purpose, but I tend to want to pick from different categories for different purposes. All right. So example, you could use a simple move, and this is the same example from here. You could use a simple moving average. So you can focus on stocks that are generally trending upwards long term, and pair that up with the RSI, like I did, to show you when to get into the trade, like when it's oversold, and when to exit the trade, like when it's overbought. In addition to that, you could also add the volume bars, like I did, at the bottom of the chart, so that you can filter out low volume fake out moves. All right. So a lot of people add that third element there, the volume indicator, like the volume bars. So that might be another filter. You might say, okay, I like to buy when price action's generally trending upwards, which the moving average could tell me, or the RSI line could tell you as well. and I like to buy when it's at the bottom here, when it's oversold according to the RSI 30, and then sell when it's overbought according to the RSI 70 level, for example. But you might have another filter where you say, I'm not going to do anything. Even if those conditions are true, I'm not going to do anything if the volume is really, really low, for example, because that could be a fake out. Could be a low conviction, low volume move, and so that's not necessarily when you want to get in if there's not a lot of conviction, because then the price action could turn right around at any moment. All right, so that could be a third filter for you and a third category. All right, I hope this was helpful to you, just to give you some insight into how I think about pairing up combinations of technical indicators. And if you want some more help with this, I do offer coaching. For the coaching, you can email me anytime at davidmodell@gmail.com. It's right down there, okay? And if you like this video, please give it a thumbs up on YouTube. And again, I appreciate your comments and your questions. Those give me great ideas for future videos. All right, and if you have not subscribed, please do that right now and hit that notification bell so you can be notified whenever I put out new videos like this one. Thank you so much for watching and listening. I'll talk to you again soon.